Okay, let's unpack this. Imagine having a true shortcut to understanding the next big thing in AI without drowning in, well, a tsunami of data. Today, that's exactly what we're doing. We've received a substantial stack of sources packed with insights on SoundHound AI, or SOUN. It's a stock that's not just making waves, but often sparking intense discussion, particularly because of its close connections to Nvidia. Our mission for you, our listener, is to distill what's truly important from this material, to identify what could be the next spark, in its trajectory, and to equip you with the knowledge to be genuinely well-informed about this evolving AI growth story.
Exactly. And this deep dive will be your guide, navigating through some fascinating technical analysis, a deep look at the subtle rhythms of the market, and crucially, the financial insights that often get overlooked amidst all the hype. We'll explore why our sources suggest SoundHound is, well, considered by some to be poised for another potential explosion in its stock price. We'll look at what that highly anticipated movement could mean and the various sophisticated strategies presented in the material for navigating its journey. It's about understanding not just the what of SoundHound's current market position, but the profound why it matters in a rapidly accelerating and, let's be honest, often unpredictable sector.
So let's jump right into the core of this then. What exactly is SoundHound AI, and why is it capturing so much attention right now? Our sources certainly position it as a hot growth stock, an AI stock ready for its next explosion alongside the juggernaut that is Nvidia. What's the initial picture you're seeing here?
Yeah, what's fascinating is that SoundHound, S-O-N, is presented as a leading innovator in conversational AI. They're not just a generic voice AI company. Their core business revolves around developing these advanced voice AI platforms. Think enabling seamless human-machine interaction. Things like powering complex voice assistants in cars, smart devices, even customer service solutions, allowing them to understand and respond to natural language with, frankly, remarkable accuracy. Our sources highlight that this foundational tech has positioned SON for a strong mid to long-term upward trend, one that's been steadily accelerating, which indicates persistent underlying demand and market interest. It's currently at a really crucial juncture, specifically where swing and midterm trends are converging on its charts. That often hints at potential short-term directional movement. The analysis points to SoundHound's price having risen with remarkable consistency. We're talking about approximately $1.05 per quarter based on its wave lows, with the stock currently trading around, what, $14.26? This consistent upward momentum, quarter after quarter, it suggests a powerful, almost rhythmic buying interest leading up to this point.
That consistent, almost predictable growth trajectory you mentioned is certainly compelling.
Yeah.
But beyond just the stock price performance and its core tech, what specifically is making it such a hot growth stock in the broader, intensely competitive AI landscape? Is it like a breakthrough technology, or perhaps it's strategic market positioning that our sources are emphasizing?
That brings up a critical point.
Mhm.
While its proprietary voice AI tech is definitely a key differentiator, the material strongly suggests its association with the broader, booming AI sector, and crucially, its partnership with Nvidia is a major driver. That's the driver of its hot growth stock status. It implies SoundHound isn't just a voice AI company. It's seen as an integral, almost symbolic part of the larger AI growth narrative. Our sources suggest this creates a powerful halo effect. SoundHound's fortunes are closely watched, like a barometer for the broader AI sector, often moving in lockstep with the titans. This means an investor isn't just betting on SoundHound's specific technology. They're almost making a high beta play on the entire AI wave, you see.
High beta, so more volatile.
Exactly. Making it particularly susceptible to market sentiment around industry leaders like Nvidia. We'll unpack that Nvidia connection even further when we get into market sentiment.
Okay, so it's clear SoundHound isn't just riding the AI wave, it's seen as a direct reflection of its power. Got it. Now, our sources heavily emphasize a technique called VPAR. For many of us, that might be a new acronym, or at least one not commonly discussed. Can you help us understand what VPAR is, how it's practically used, and why it's highlighted as such a critical tool for analyzing SoundHound?
All right, VPAR. It's presented as a highly specialized technical analysis method. It's designed to identify key inflection points and what the sources call trend pulse points in the market. Think of it like a sophisticated radar system. It doesn't just show where the price has been, but where the underlying buying or selling energy is reaching a critical threshold, signaling a likely shift in direction. The idea is to monitor a live VPR index to react to these crucial moments, especially around swing and midterm support and resistance levels. And for our listeners, support is basically a price floor where buying tends to step in, stops further drops. Resistance is a price ceiling where selling pressure tends to emerge, capping gains.
Okay. Support and resistance, standard stuff, but VPR sees it differently.
Kind of. The report illustrates it vividly with examples on charts. Circled areas where short-term trends merge perfectly before strong, explosive surges. Those indicate high probability entry points. Conversely, you have X-mark areas signaling clear trend breaks and potential bounce points based on these different trend levels. It's about combining intricate trend analysis with wave flow, essentially, the ebb and flow of market sentiment for more informed, high probability decision-making.
That sounds like VPR is really about identifying those critical turning points and energy shifts, almost like predicting weather patterns on a chart. But for listeners picturing, say, simple moving averages or Bollinger Bands, how does VPR specifically differ? Does it use different data or interpret familiar signals uniquely? Help us visualize what a live VPR index actually looks for.
That's an excellent question. It helps distinguish VPAR from more common tools. Unlike a simple moving average, which just smooths price data, VPAR integrates multiple layers. We're talking volatility, volume, price action, and specific patterns that signal institutional activity. It's less about historical averages, more about identifying current market tension and release. That live VPAR index doesn't just show if a stock is overbought or oversold. It actively looks for the precise moments when underlying conviction, buying or selling, is consolidating or about to erupt. It focuses on the geometry of price movements, the specific way trends form and break, not just their direction. It's like looking at not just the waves, but the powerful undertow building them. Right?
Undertow, I like that analogy.
Yeah. This specificity, according to our sources, is what helps pinpoint those elusive, high-probability entry and exit points.
So it's about seeing those powerful undercurrents and identifying the market's subtle rhythm, not just the surface movements. Makes sense. Speaking of rhythm, the report mentions SoundHound is currently in a descending transitioning rhythm, which they call an energy charging phase. What exactly does that sophisticated terminology mean for an investor? How should they interpret this phase?
Okay, if we connect this to the bigger picture, this rhythm analysis describes a phase where the stock has likely passed its peak in an expansion phase, and the volatility band, which measures how much the price swings, is narrowing. This narrowing indicates a contraction, a period of reduced price movement after a strong run. The sources interpret this specific pattern as a period of energy charging for the next potential explosive rise. Think of it like a coiled spring, gathering momentum.
A coiled spring, okay.
And this interpretation is supported by several traditional indicators mentioned. The Relative Strength Index, RSI, which measures speed and change of price movements, is moving down from overbought levels typically above 70 towards the 50 mark. Now, for anyone unfamiliar, an RSI above 70 suggests the stock is being bought maybe too aggressively, due for a pullback. So its move towards 50 indicates a healthy cooling off, a consolidation. Additionally, the moving average convergence divergence, or MACD histogram, while still positive, shows decreasing height. That signals a weakening in the rate of buying momentum, not necessarily a reversal to selling. This charging phase, according to the analysis, is critical. It's for the careful formation of a new rhythm cycle, essentially setting the stage for the next significant price move.
That energy charging phase sounds incredibly promising, almost like a guarantee for the next big move. But, what if that charging phase extends longer than anticipated, or even turns into a deeper correction than just an energy charge? Do our sources address potential downsides or misinterpretations of these rhythms, especially when you consider broader market volatility that can just throw a wrench into even the best technical setups?
That's a crucial question, absolutely, because no technical analysis is foolproof. While the sources highlight the potential for an explosive rise, they implicitly acknowledge the risk. This charging phase could indeed last longer or even lead to a deeper reevaluation. The very need for specific TRAP resolution and rhythm conversion signals, which we'll discuss in a bit, underscores that patience and confirmation are paramount. You can't just jump in. If these confirmatory signals don't appear, or if broader market sentiment, especially around AI, sours significantly, then the charging could turn into a more prolonged consolidation or even, a downtrend. The analysis emphasizes these rhythms are probabilities, not certainties. Strict adherence to entry and exit signals is essential to mitigate such risks.
Okay, probabilities, not certainties, got it. So we've delved into SoundHound's exciting growth narrative and this sophisticated VPA method. But every growth story has its foundations, and sometimes those foundations come with challenges. Let's shift gears a bit. Our sources also paint a very clear picture of SoundHound's financial realities, highlighting significant debt and cash burn. What's the full story here? What are the crucial risks we, as investors, need to be fully aware of?
This brings up a critical point about sustainability. Especially for any high-growth company, SoundHound's financial flow shows a high debt ratio, exceeding 300% as of Q2 2025.
300%. Wow.
Yeah. To put that in perspective, a healthy debt ratio is typically below 100%. So 300% means the company has 3 times more debt than equity. It's significant. A big chunk of this debt comes from what are called convertible bonds. Now, these aren't just regular loans. They're bonds that, under certain conditions, can be converted into company shares. In a high interest rate environment like we're in, these bonds come with substantial interest payments. That directly drains cash flow. But the real kicker for current shareholders is that convertible aspect. It creates a future overhang. Furthermore, the company's operating cash flow is negative, minus $45 million. This indicates their day-to-day operational and development costs far outstrip the revenue they're bringing in from their core business. This isn't just a minor deficit. It suggests a likely and significant need for additional funding, either more debt or issuing new equity to repay those convertible bonds due in 2026 and finance ongoing expansion.
So if they need more funding to repay these bonds and keep expanding, I imagine that inevitably brings up the dreaded D word for existing shareholders, dilution.
Precisely. The report explicitly mentions dilution risk, and it's a very real concern here. To raise capital, the company might be forced to issue more shares. Or those convertible bonds we just discussed could be converted into shares by their holders. Either scenario increases the total number of shares outstanding. Imagine you own a slice of a pie. If the company issues more slices, your existing slice becomes smaller percentage-wise. It dilutes the value of your holdings, even if the total company value stays the same. Beyond this, there's the intense competition from tech giants, Google, Amazon. They have vast resources, heavily invested in voice AI too.
Right, big players.
Exactly. This demands continuous technological superiority and significant R&D investment from SoundHound just to keep pace, which adds to their cash burn. These are crucial financial and competitive factors for any investor to consider, balancing that high growth potential with these inherent pressures.
So it's a real tightrope walk between innovation and financial prudence. Yet, despite these financial pressures, the market seems quite optimistic, especially looking at community sentiment. What's the buzz on social media? How is that collective sentiment influencing SoundHound's perceived potential?
The community data is quite telling. It provides a fascinating psychological snapshot of the market. Reddit mentions for SoundHound were up a staggering 55% month over month.
55%, that's huge.
It is. Twitter tweets saw a 60% increase with a very strong 70% positive sentiment. And StockTwits had a 34% increase in mentions, with an impressive 81% of users placing bullish bets. But what's truly fascinating here is that Nvidia is consistently a top keyword across all these platforms, almost inseparable from SoundHound discussions. This indicates a strong psychological link. SoundHound's perceived potential is heavily tied to Nvidia's investment, yes, but also, more broadly, the overall positive sentiment around the entire AI sector. The forces even note an exceptionally high covariance of 0.90 with NVDA.
0.9.
Yeah. For our listeners, a covariance of 1 means they move in perfect lockstep. So 0.90 is incredibly high. It means SoundHound stock is highly sensitive, almost a leveraged play on the broader AI investment climate led by Nvidia. Its movements amplify the market's mood towards AI.
Wow, a Beto 0.90 covariance with NVIDIA. That's an incredibly strong connection. For our listeners, and honestly, even for me trying to grasp the full picture, what does that level of correlation truly mean in practical terms? Does it suggest SoundHound's future is almost entirely dictated by NVIDIA's movements and the broader AI tide? Or are there still nuances the sources point to that give SoundHound its own independent drivers?
That's the million-dollar question for many investors, isn't it? While such a high covariance strongly suggests SoundHound will likely mirror the general direction of Nvidia and the broader AI market, amplifying both upward surges and potential downturns, it doesn't mean SoundHound completely lacks independent drivers. Our sources imply that while the macro AI trend sets the overall current, SoundHound's specific technological breakthroughs, new customer wins, or successful product launches could still provide independent catalysts. However, in the current environment, the market's perception is so deeply intertwined with Nvidia and the AI narrative that these independent factors might only serve to slightly enhance or mitigate the primary Nvidia-driven momentum. It highlights the dual nature of these high-beta AI stocks, immense upside potential when the tide is rising, but also amplified risk if the sector faces headwinds.
That distinction is crucial. Okay, so with all this information, the VPAR insights, the financial risks, the powerful community buzz, that deep NVIDIA connection, what kind of strategic approaches are suggested in the source material? For someone looking to engage with this stock, whether they're a short-term trader or maybe a longer-term investor.
Right. The analysis provides a really comprehensive, multi-pronged action plan
Mm.
based on different time horizons, aiming for those high probability entry points.
Still,
For the short-term trader, a buy strategy is suggested around the current price, roughly $14.26, but only when specific supply diffusion signals appear. These are intricate patterns indicating selling pressure is dissipating, particularly after what's called a TRAP resolution and rhythm convergence.
okay, TRAP resolution and rhythm conversions. Can you quickly break those down?
Sure, a TRAP resolution is a specific chart pattern. The price momentarily fakes out in one direction, trapping short-term traders, before reversing swiftly and moving strongly the other way. It signals a market shakeout. Rhythm convergence is when multiple technical cycles, like short-term and mid-term price movements, align. This amplifies the potential for a significant directional move. This short-term strategy aligns with an anticipated fourth wave correction part of Elliott wave theory, where the fourth wave is a common pullback or consolidation, which could then be followed by a powerful fifth wave surge. Now, for swing trading, looking for moves over weeks or a few months, the $12–13 range is specifically targeted. This entry requires a deeper TRAP resolution and robust confirmation of the swing pulse point at $11.02. That signals a strong bounce foundation. And for midterm investing, looking several months to a year out, a two-phase entry is advised, first at $12–13, then a second, more cautious entry at $10–260. This factors in broader macroeconomic trends, like expected interest rate cuts that could boost growth stocks. The Elliott wave analysis further details this, suggesting the current fourth wave correction could find strong support between $12–13, potentially launching that powerful fifth wave towards $17–20. It's a highly structured approach, emphasizing specific trigger points over, impulsive reactions.
That really ties all those complex elements together into actionable scenarios. It emphasizes patience and strategic entry based on these specific technical indicators and market rhythms. It's a truly structured approach, definitely far beyond just chasing headlines or immediate hype. So what does this all mean for you? We've taken a deep dive into SoundHound AI. We looked at its compelling growth trajectory fueled by its voice AI tech and that Nvidia connection. We explored the unique VPAR analysis method used to identify critical market rhythms. We also confronted the undeniable financial considerations, the debt, the cash burn, and felt the powerful pulse of the market through community sentiment. It's abundantly clear that while the AI sector presents incredibly exciting opportunities, understanding the underlying mechanics and inherent risks is absolutely paramount.
Indeed. The material, really designed for the discerning investor, emphasizes that successful investing doesn't have to be overly complex, but it does demand a nuanced understanding. For individual investors, the suggested approach from these sources is select a few strong, long-term stocks companies with robust fundamentals, compelling growth narratives, and then use a precise two-split entry strategy for swing and midterm trading. This maximizes entry probabilities. It also highlights the generally higher probability of success in the dynamic U.S. market. The insights provided are a meticulously crafted roadmap for identifying those high-probability entry points. But always remember, all investment decisions ultimately rest with you, the investor, based on your own research and risk tolerance.
A truly fascinating exploration to a company right at the heart of the AI wave. Here's where it gets really interesting, I think. Given SoundHound's incredibly high covariance with Nvidia and that stated rhythm of energy charging for what sources suggest could be the next big move, how much of its future is truly in its own hands and how much is simply riding that broader, powerful AI tide? And beyond the technical indicators we've explored today, what new signals might emerge in the coming months? Signals that could truly confirm that this next explosion isn't just a ripple, but a sustained, impactful wave that could reshape its trajectory. Something profound to think about as you continue to navigate these intricate markets. Thank you for joining us for this deep dive.